So, I just jotted down a couple questions I wanted to ask you about just after reviewing your TikToks. But if you want to go ahead and start off, I saw one you talked about shoes, kind of how you got that hustle mentality started.
Yeah. So that's the quick origin story. From a 30-foot view, the current place is I'm a marketer and I'm a real estate investor. So I help other brands and people make content that connects on social media. And then I also invest myself. So we have a handful of long-term rentals, short-term rentals, and a flip going on. And that's always kind of been, you talked about hustle. And I guess I was always the kid early on to hustle. I started off in high school. You saw the TikTok, which is fun. Like most Filipinos in the Bay Area, I collected sneakers. And so I took all of my high school job money, bought ugly Jordans that were collectible, and then restored them and then flipped them for more money. Throughout college, was really big into martial arts, so I managed a martial arts school that kind of gave me a little bit more of a business sense and what it takes to run a gym. Went to grad school, ended up starting a CrossFit clothing brand in Hawaii in grad school and a CrossFit gym. Left those business ventures, and then now here I am today doing marketing and real estate. So it's been a blast.
So, is owning a gym not a vibe? I've heard mixed reviews.
I would not buy a gym again. How about that? It worked out for Alex Hermosi, great, but I guess I'm not Alex Hermosi.
Yeah, yeah. Well, no, it didn't. Remember, he sold all his gyms and started selling sales courses to gyms. So he didn't love the gym business.
It takes a certain person to really stick with a gym. It's very viable. I think what's very hard is, especially on a service-based business like that, when you are stuck to a certain schedule, staffing is one of the hardest parts because you have to staff it at 5 o'clock in the morning or sometimes even late at night, especially if you're doing, more personalized training and or in a class environment. Being able to have consistent staffing that's good and also find the margins enough is a difficult task. And there's only a few gym owners that I know that have actually been able to run their gym and actually be able to step away from being the owner operator and really just be an owner. And I only know a handful of those personally. But it's possible. It's just a lot more difficult than other business models.
Yeah, I'd imagine. Cool. That's actually pretty cool. I didn't know the gym part.
It's that's another series in its own, but one day.
Owning a gym, what not to do, what to do, all that fun stuff. So you said handful of rentals, some short-term rentals, a flip. I try to dip my fingers in everything as I've tried it. I pretty much tried everything on real estate except for wholesaling because I'm like that sounds like way too much work. But why don't you talk to me like what your first deal was? Walk me through it, the numbers.
Yeah, so the first deal for us, and I guess maybe the quick why, in essence, it's Lambo money, which is really just the FU money to be able to do whatever you want, have all the freedom, all that good stuff. But just for fun, I like to say Lambo money. And initially, I thought it was going to be through buying, one or two long-term rental properties throughout the year. And so I got the idea from my friend in Hawaii who ended up buying 44 units in the first 2 years and was doing great. And I was like, dude, how are you doing this from Hawaii? He's buying them in Knoxville, Tennessee. And I said, like, how is this happening? He walked through the process, picked his brains like everyone else does. And then I went on to Bigger Pockets, picked a market, and it was Columbus. So our first deal was the first deal that we got under contract. 20% down conventional. I bought it for 120, put an extra five just to rehab it a little bit. And then from there, it rented for 1,300. Our mortgage was $600 a month. So after saving for some maintenance and expenses and things like that, it cash flows about $400 a month. At the time, I actually wanted to back away from that deal, but I'm really glad that I kept it now.
Yeah, I think that your first deal, it's never your best deal, but it always is the best deal because now you know and now you feel comfortable with the process of buying remotely, especially. And both of us were in the Bay at the time. I mean, we have no chance of buying something that ever will cash flow. um, we had to go remote. That's actually funny because Columbus was actually the first. Well, it was my third property. It was in Columbus, Ohio, and it was just my full-fledged. I don't know anyone out in Columbus. I need to go make as many friends as possible, and then have this deal start happening. I only went. I went to Cincinnati, and I think this was when I was closer at like the 30 or 40 units mark, because my buddy's like, "Yo, I'll fly you out. You can stay with me." But we become buddies, and I was like, "This is weird. Like, we've worked so much together, talked so much, and I haven't ever met you. So he's like, I'll fly you out. You can stay at my house. And now we're business partners. I bought into his mortgage brokerage, and that's how it became like the mortgages of of Ohio.
Yeah, I mean, it's a crazy thing how the internet works that you can, jump on a couple calls, couple Instagram DMs, and all of a sudden, I mean, I did the same thing. On our first short-term rental, I had three other investor buddies that I've never met in person before just say, "Hey, you want to meet me at the house in Joshua Tree and help me build out some stuff?" Like, sure. And they was just crashing for a few days.
I guess so. Yeah. Let's do it. Cool. So that's your first one in Columbus. Was it a single family, duplex, triplex, quadplex?
Yeah, single family house. Just kind of just put tenants in there 2 weeks later, and it's been same tenants ever since. So
That's pretty cool.
I love it.
And what year was this, by the way?
I bought my first one January of last year, so it's been about a year and a half.
January of last year. What was that? 2021?
2021.
Wow. Okay, cool. And then where have you gone from there?
So in total, it's 8 long-term rentals, 3 short-term rentals, a flip, and we're under contract for an RV park in Missouri. So I don't know. It's been a whole lot. And then definitely we're kind of doing some goal assessment next year as we've networked a ton, hosted more meetups, and I've started my own podcast too. It's just helped me think bigger. And so next year is, how can we buy something that's 60, 70, 100 units? And that's almost kind of the one thing focused for next year.
That's pretty cool. Yeah, doing bigger deals, it's honestly the same amount of work, I find, and you make more money most of the time. No matter how you do it right, but
Yeah, it's the same amount of work, right?
yeah,
Just another zero and another comma.
exactly.
That's what Brandon Turner says, at least.
Another zero, another comma. I like that. So walk me through. So January 2021, did you put up all the money yourself? You have business partners. How'd that happen?
Yeah, so backstory. I alluded a little bit to it. So we're from the Bay Area, moved to Hawaii for a little bit, had a couple business ventures, and at the same time, both my wife and I were working at the University of Hawaii, making $40,000 a year as state employees each. We had our first kid, and then we moved back to the Bay. Her parents are here, my parents are here, it made sense. I lived with my parents, and I said, hey, can we crash here for a couple of months? And that couple of months turned into 3 years. I somewhat blame COVID, but I also, early on, my dad sat me down and said, hey, you guys are more than welcome to stay here for a little bit if you just save everything for a down payment for a house. So you can stay here for a couple years and just save. And so 2 years later, we saved, and we saved 100 grand in cash. I was like, dude, this is awesome. We have 100 grand in cash. Started doing the math. If I bought a house here in the Bay Area, 100 grand is not even 20% down for a house in San Jose, which the average is like 1.3 right now. And my mortgage payment, not including property taxes, would be like $7,000 a month. Do I really want that overhead for my family? And then I was talking to my wife. Well, I don't know. We both don't make over six figures. So how can we actually afford $7,000 a month in mortgage? And we just couldn't. And I said, well, what if we took all that money and started dumping into rental properties? So that first one, that was our seed money for our own house. But I decided, hey, you know what? Let's figure out this thing, and maybe we can buy enough rentals to close the delta in between not working in tech to then be able to afford in the Bay Area. And so that's kind of been the drive ever since.
Gotcha. Cool. So first house, all you. Second house, when did it happen? Timeline between there?
Second house was technically we closed on the second house before we closed on the first house. So, and we closed on with them 2 days from each other. So we got that first house under contract, and we were going through the HUD, and it was like, all right, your cash to close is $30,000 and some change. And I was calculating out, well, we had $100,000, and if I'm putting 30 plus closing plus rehab, I think I could only do this 2 more times. My plan's not going to work out anymore. So then, we're like, let's do a BRRRR deal. So we started looking into BRRRR deals. So I called 50 hard money lenders. I was on everything about Columbus real estate, an off-market property group, and someone posted a house that was 2 blocks down from the house that we were under contract for. It said, here's a house for 75 grand. Who wants it? I DM'd the seller. And I still use my agent, and the agent actually, we locked it up under contract with hard money. And so I bought that house for $75,000 with hard money. Put in 35 for rehab, so we're all in for 110-ish, not including hard money costs. We were in rehab for 3 months, and then it appraised 6 months later for $175,000, which is awesome. And it rents for $1,300 a month as well. So that was like a two solid wins back to back, and at that point we were hooked.
So you did the cash out refi, took that straight into property three.
Yeah, which property three was our first partnership deal, and then I realized, okay, even if we're doing these bird deals, you still need to front equity or you still need to front cash in order to make these rehab costs happen, right? Because the hard money, they'll fund your rehab, but you'll have draws. And so if they don't have significant cash for those draws or even just reserves, they're not going to be able to do deals. And so we had active projects, still waiting for things to close. And so we found a duplex in Columbus in a different neighborhood. And we brought on my wife's best friends, found the duplex for 130, another bird deal, put in 60. It appraised for 245, got almost all our money back on this one. And that one rents for 1250 aside, and so it cash flows about $700 a month.
Damn. So two home run bird deals, and then I'm guessing deal number four, you didn't even wait the 6 months for that first for deal number three to season.
Um, I deal number three. It was a home run deal, but that rehab took a lot longer. So as we were going through rehabs, I also at this point kind of had the mentality of, all right, let's talk about it all the time. Let's go to a million different meetups. Let's just see what else I can learn, who else I can partner with. And so I had the mindset of, let's just do as many partnerships as possible, just to get as many slices of a pie as possible. And so I ended up doing a couple deals with my dad where he fronted all the money. I found a business partner to do a short-term rental, and that's Ash, and now we've done 6 deals together. And then we also brought on Ash's aunt for another short-term rental. So it's kind of just been talking about it with everybody, seeing who's interested in what, and then from there just figuring out what the business plans are. But it was a lot of learning, a lot of networking, and a lot of dinners.
So partnered is I had the same business model. of just bringing more and more outside money.
I mean, because you only go so far, right?
So that probably sped things along. Now you said,
Yep, yep.
yeah, exactly. You now have you're sacrificing the equity, but you can partner quicker and faster and do more deals. So the next one, was it also a burr? Are they all burrs?
I've done, gosh, now. I mean, there was one that wasn't supposed to be a burr, but it. I mean, we're just gonna refinance it in a couple years. There was another burr after that where we bought a property from actually my previous hard money lender, started wholesaling things, and so we bought one directly from him. We bought it for $90,000. We put in 30 for rehab, so that's 120 in. And then we did this one all with the HELOC, so it was like 2%, 3% interest at the time. And then that one appraised for 185 and rents for 1250, so got all our money back on that one too, and it cash flows, I don't know, $150 a month, nothing super crazy, but we're in the, we got the equity. And it's really, as people think about bird deals, $100 a month, $200 a month is awesome, but it's not anything to write home about. But the thing that I think about is we just made 30, 40, $50,000 in equity kind of out of thin air. And that's all tax free at the moment. So
The way I usually think about that too and explain it to people is like, as you just refinance it, that is probably going to be the lowest amount of rent you're going to collect ever. That monthly payment's going to be fixed. So let's say rent increases $200 to $300. Now you've 300% gain on what your cash flow is just by that small increase. That's the way I usually look at it.
yeah, I mean, you've now had it for a few more years than me, so you can see the different rent increases. I'm excited as the year goes on because your debt stays the same, but your income keeps coming up. So, and then it only compounds.
Exactly. You're slowly building the equity. You're slowly getting the depreciation. You're getting all the benefits just by holding on. So, sounds like four bird deals. Is that the fourth one? Are these all bird deals?
For the, I mean, most of the long-term rental ones are, and then a few short-term rent, and then some of them are duplexes and things like that. So that's where you get the 8 long-term rental units, for counting doors, like everyone wants to do on Instagram.
Yeah, it's way nicer to say, well, I have one apartment complex. No. I got like 30 doors. Don't worry about it.
Yeah, it's 130 unit, right? This vintage, whatever. You gotta use all the lingo just so you sound more legitimate.
And try to make the number as high as you can.
Yeah, exactly.
So, short-term rentals, are you buying them and Airbnb them out, or are you Airbnb arbitrage? What is it?
So we have a Joshua Tree short-term rental, and that's the first night we launched and we bought it. So I went 50-50 with Ash on that one, and that was the first deal that we did together. Um, and we closed on that one in September of last year, and only launched it earlier this spring. I'm sure everyone has kind of heard about the Joshua Tree Airbnb permit fiasco, and we definitely got caught up in that mix with Yucca Valley specifically. So we end up having uh, the day that we turned in the application was basically the like right around the same time they put a moratorium on issuing new permits, and they said, "Well, you're going to hold off now." And so for and they also didn't give us a definitive date. So this was like end of October, and they said, "Hey, we're going to reassess in a couple weeks." Like, all right, we'll wait a couple weeks. We should get an answer. Oh, by the way, we're going to wait till end of December. Oh, by the way, it's going to be in January. Oh, by the way, it's going to be in And then it was just this like cyclical where they keep pushing it back 3 weeks, and that was actually a nightmare because now we had all these unexpected holding costs. We didn't put a midterm rental in there until the very, very end. Um, but for that one, it's now up and running. It is not as good as we thought it was going to be, but that's also just because I think everybody bought a short-term rental in Joshua Tree. Um, but we're lucky that we have a four-bedroom house, which differentiates us. Where most of them have a 2 or 3 bedrooms, so we definitely have a large family gathering house. Is what I'll call it.
You gotta get the SEO right on these things. Large family gathering.
Well, I also don't want it to be a party house, right? So
Quaint desert oasis.
yeah, it's so there's that one, and then we have one in Branson, Missouri that technically we only have a management stake for. So we bought on Ash's aunt, and then she bought the property in its entirety. So we have zero money in the deal, but we do just take a management fee from that deal. And the other one is an Airbnb midterm rental in Columbus. That's one of Ash's duplexes, and that's how we initially got connected because we were both in Columbus. And so on one side, she has a long term tenant. On the other side, I said, hey, here's all the research, I did all the numbers. If I put all the furniture on my credit card, you want to do this? She's like, sure. So that was our third one.
So is that one you Ash owns it, or you own it, or it's a rental?
Ash owns it. And then we split the cash flow, and we have a midterm rental in there. So it's not a nightly short term rental.
Gotcha. And I'm sure that's for travel nurses. I'm pretty sure it's pretty big out there.
Yeah, yeah. So we've had a couple nurses so far. We have a radiologist right now. But actually, in specific neighborhoods in Columbus, you can actually make more on a month to month basis than you can on what your AirDNA project.
Yeah, I think AirDNA is usually pretty conservative. It just knows that there's some shitty Airbnb owners and some people that actually go, I want this for Airbnb. My buddy has one Airbnb when he bought these like kind of janky fourplexes. His one Airbnb makes more than the other three units on the fourplex. So I was like, sounds like you got to start kicking people out and doubling down on the Airbnb.
Yeah, yeah. I mean, the hard part with the putting Airbnbs in there, at least initially, right, is you can't buy it with that intention because a lot of banks won't finance that off the get go unless you get different types of loans. But from the conventional standpoint, and that was a problem that we were having as we were thinking about multifamilies. Could we do just midterm rent?
Dude, you work with me. I'll take care of you. I'll get you all. Ohio. Ohio's my bread and butter. Like Ohio, Kentucky, Florida. We just are expanding to Washington, and eventually we'll expand to California. But those are where we're taking, and we do the Airbnb loans, help people out, get those covered for them.
I like it. Can you do it on commercial side too?
Commercial side, yes, yes. Are you talking about like commercial properties, as in like storefronts, or are you talking? What do you mean by that?
Say we bought like a 20 unit and wanted to do all the midterm rentals.
You would to do commercial loans, and this is what confuses people sometimes. A lot of the time, it's not based off of your income at all. It's based off of the property, right? I don't expect one person to be able to afford a apartment complex. So when you buy this, I would expect that you would either do a bridge loan, which I unfortunately, actually no, we can't do some sort of bridge loans. So you would do a bridge loan where you're like, hey, interest only, please. I'm gonna fill it up full of, and turn it into cash flowing. Give me 12 months, um, and you have to like prove that it's cash flowing. And then most of the time, it's like a 25-year arm. A lot of people are scared of arms because that's how the 2008 crisis happened, but it's a lot different of a process. A lot more paperwork is involved, but it's mainly looking at all of this, how much money you're spending on vacancies, expenses, HOA fee, roofing, maintenance, all these different things. We take that into account, and then we go, okay, well, if you put X 20% down, 25% down on this, commercial deal, we'll be able to put this all together for you. Um, you're going to get this rate, and it's fixed for 5 years, and then after the 5 year mark, I always say, I can't even imagine what 5 years is going to be like from now. But in 5 years, that's when your rate will change based off of whatever the prime rate is. So if rates go down, knock on wood, then it will go down too. If rates go up, it'll go up too.
Gotcha. Well, I will keep that in mind, Keith.
Yeah. Cool. So you've talked a lot about Airbnb arbitrage, which is why I was curious what your thoughts are on it, what markets you think are good spots for that, or what markets you think are good spots for Airbnb in general.
And I think and that answer largely depends on what your arbitrage model is. Because if you're going short term versus midterm, that's completely different. For the arbitrage that we're focusing right now, and we are actively looking for units to arbitrage, specifically in the Bay Area, as more luxury midterm stays. So I'm not looking for the vacation market. I'm looking for a contract workforce, something that has a lot of employment, kind of either turnover and or staffing needs. And then can we also work on supplying housing for people, extended housing, say if they're on some type of contract, or whether it be a travel medical professional and or a tech employee. And that's just, Ash is also, her day job is a tech recruiter. And so she sees the staffing and the housing contracts, and she knows what the vendors are already. And she was like, if we just become one of the approved vendors, it is money in the bank. And so,
They'll fill it for you.
yeah. And I was like, all right, well, I'm going to lean on your expertise here. So that's what we've been looking at now, is just looking at different, whether it be houses and or luxury apartments that we can arbitrage to do midterm in.
Have you talked to a lot of luxury apartments? What's usually their take on it? Especially, I mean, I feel like midterm's a little bit nicer of a pitch than short term.
It is. It is. I mean, in full transparency, we haven't locked down one yet after 50 cold calls. And that's just because, one, we don't have a track record in the area, which is the hardest thing. All the units that we have right now are technically they're on Airbnb, and the two nice ones look like party houses. So we're working on changing up the marketing and changing up the sales pitch a little bit now. I want to market on Airbnb, and that's kind of the big stopping point for a lot of these bigger luxury complexes that have their corporate headquarters, is that they'll have all of these policies in place that prevent individual operators from coming in and just saying, hey, I'm going to put this on Airbnb. Even if it's a 30 plus day stay, it's still a battle. So I'm kind of crafting this sales pitch now to where just be, hey, we're going to post this on Airbnb, but I'm kind of using the excuse of air coverage just to give extra insurance policy for both myself and for the property as well. So we'll have our own renters and property, but we'll also facilitate all the bookings and have that additional coverage to the Airbnb, which is something that is an added benefit in addition to whatever business insurance we have. That's my new pitch. Hopefully in a week I can update you and it does better.
Yeah, maybe we'll log it down soon. I got a question for you. I think I saw one TikTok that said that you actually host the real estate meetups. How did you start doing that? When did you start doing that? And where are they? I think just off like the little screen of TikTok was one at San Pedro Market.
I've been to one there. I haven't hosted one there, but I guess the origin of the meetup, I'm a natural extrovert, and so I like the sales side. I like meeting people. It's fun. And I bought my first property, first couple in January. And then and this is still smack dab in the middle of COVID. and people were starting to come out of their shell a little bit more in the springtime. And so I found a few other um, Instagram investors and who were in the Bay Area, and I said, "Hey, you guys want to do something? People are kind of coming outside now, and I've never met any of you. Like, let's just get everyone we've been talking to on Instagram together at a bar." And so that was March, and we actually had 70 people show up to that one. It was ridiculous.
Dang. Which bar was it?
It was Big Al's in Milpitas.
Oh, okay, I've been there.
Yeah, I mean, it's a great space. It's huge, which was also good because I didn't realize the turnout was going to be that big, and we did not reserve the space. So,
Just the night to be at Big Al's. We're all trying to bowl.
well, the good thing is we did it in the middle of the day, and surprisingly, the place was empty. So we were really the only group there. So, kind of worked out actually. And since then, we've been hosting monthly meetups ever since.
Nice. Where are the other places you've been to or hosted the meetups?
We actually do for so every second Wednesday of the month, we still host them at Big Al's in the patio outside because it's always open. We can always get a few tables. And now we roughly get between, I'd say, 12 and 20 people on a regular basis. And then once a quarter, we like to do bigger events. And so we'll do more of that workshop series that most other meetups will also do. And then you have your mingling. But it's just been really, really good for me to be able to meet more investors, figure out who's doing what, and really just get vendor connections because that's the biggest part when you're going to these meetups. That's also where I found Ash, was actually that first meetup that I hosted. So that's been a tremendous blessing. And then now starting hosting a weekly, that's supposed to be a weekly live podcast. That's also just allowed an extra avenue to be able to get deeper with some of the investors that I meet.
Nice. Dang. So 70 on your first go round. That sounds insane. Did you already have a big Instagram following for real estate?
No, no. But I did part. I mean, I guess even the people that so I hosted it with Austin Largusa, and at the time he probably had maybe like 1,500. I did also host it with Soli, the lattes and leases, but at the time she was under 10K, so none of us were like huge, huge, huge. But I think
Oh, is she? It's funny is our brokerage works with her, the lattes and leases. So that's funny that you know. I was like, because I know her because I saw she posted stuff about. I also do it in Ohio. I'm like, dang, we're all here in Ohio, all from the Bay Area. So you guys all kind of like grouped up. Yeah, Cincy.
we did, yeah. So we jumped on a couple calls. Austin also he invests in Cleveland. I was in Columbus. She was in Cincinnati. And we kind of just jumped on a group chat and we're just like, hey, you want to just do this? I think it was the perfect timing of, I like to say that Instagram and COVID kind of set in a new wave of investors, right? I mean, we look sort of the same age. I'm not going to assume how old you are, but uh, I'd say those in their late 20s and 30s are finally coming into their full time and regular careers and a little bit of money and are able to now place it or are thinking more in terms of financial stability, fire, all that good stuff. And that's an interesting arbitrage right now, is that attention is like, what are the 30-year-olds who are making really fun, cool events about real estate? Because some of the ones, unfortunately, on meetup.com are tailored to a different demographic.
They're all old people. That's a long way to say they're all full of old people, man. You go to one of these things, bunch of old people in suits pull up, and you're like, oh God, where am I here again?
You're at a conference hotel room, and everyone sits down and lined up chairs, and
And you're like, oh, dude, what? And I'm supposed to listen to some guy, and someone's always pitching something that, like, obviously only benefits them. Buy my course, buy my book, buy my one-on-one seminar, and I'm like, man, dude, you're you're not for the people right now. But but yeah, I like that a lot. So, what platform do you guys host it on? Is it still Instagram of just like, hey, we're gonna go here?
it's largely Instagram. But we have it on meetup.com, which we've gotten a few different folks now. And I'd say most people our age aren't on Instagram. We find, again, the older demographic is on meetup.com. But I think as I've posted more consistently, I've gotten a lot more people that have just, hey, I saw you on TikTok. So I showed up to the meetup randomly. I was like, dude, that's the craziest thing in the world. Thanks for coming, and it's a blast just to see what random people can find you on TikTok. So anyone who's sleeping on TikTok, stop sleeping on TikTok.
People are sleeping on it. I think I got shadow banned though from TikTok because my reels probably get like 10 to 15K a pop, and my TikToks are failing me all the time. Same videos. I'm like, I don't know what's going on here.
What if you try posting them at different cadences just to see?
Like not at the same time.
Yeah, so post your TikTok first or vice versa, and then just to see how it reacts, and or maybe change up the content style just to see. Because I know that some things I'm like, this is gonna pop off on TikTok, and all of a sudden it just jumps up on YouTube, but not on TikTok. I'm like, man, you're never gonna win.
Yeah, yeah, maybe that's a good idea. Trying to change it. I usually just try to have at least one post or like 4 or 5 posts a week, and then those are more drafted, and then I still have the account myself that I'll do the one off, like you said, the changing directions constantly.
Yeah,
And then I'm gonna double down on the one question I asked earlier, and it's pretty much the last question I have written down here. So I said, "What markets do you like?" And you kind of weaseled away from that question, saying that you're focusing on the Bay Area. But are there any other Airbnb markets that you think this place is the next Joshua Tree before Joshua Tree?
Branson, Missouri, 100% Branson, Missouri, like without a shadow of a doubt.
Why? Why is that? What's there? I don't. I'm not very worldly, I guess. I only look it up every day.
Well, me either until we started managing one there, and then I said, oh man, this is the spot. Like we are. Think about it. Yosemite, California, 4 million visitors a year. Joshua Tree, 2 million visitors a year. Smoky Mountains, 12 million visitors. Branson has 10 million visitors a year. It is cheaper than Joshua Tree. You don't need to be as decorated, meaning you don't need to furnish it to the nines. You don't need to host the Four Seasons and recreate that hotel experience in Branson. It is the Ozarks playground. So if you are a hunter, a fisher, an outdoorsman, and you just want to go out on the lake to the mountains, hunt, get outside, you go to Branson. That's also where Bash Pro Shops' headquarters are, and they have some gorgeous. Look up after this call. Look up the Bass Pro Shops Resort. It is basically like the Four Seasons for outdoorsy people, but it's gorgeous with these crazy amenities and zip lines everywhere. With I don't know, and it's also a pretty good golf capital too. So, Branson.
Dang, very cool. I like the Branson answer. And then, do you have any fears on where the market's going? Interest rates have been rising. A lot of these places, I think a study just came out saying like 183 cities that are overvalued. I don't think Cincinnati was on there. I don't think Columbus was on there, but it was like Austin, Texas, obviously, because too many people moved there. Boise, Idaho, Salt Lake City, Utah. It seems like wherever the Bay Area people that I knew moved are the overvalued places now. What do you think about that? Do you think there's going to be a turn that we're going to see?
Yeah, I mean everyone's talking about a correction in the fears, and that's obviously really nice clickbait too from a YouTube or content creation perspective. But I think it really depends on what type of asset class that you're buying. And so for my investing strategy, I only buy in cash flow. And if there's significant cash flow at a certain margin, if interest rates even go up 2%, I mean, I've already locked in my interest rates, so that doesn't even matter. If property values adjust even 20%, I'm not planning on selling it for 5 years. So what happens in 7, in 10? My mortgage stays the same. Rents have historically stayed the same, so I still cash flow. So then I just hold it. But if you're flipping or you're wholesaling, that's where I would think you really have to be careful as you're in that type of real estate investing, because you're at the whim of those ups and downs, and wholesalers have had it really hard lately.
Yeah, yeah, wholesalers just can't get those things unloaded anymore, and I have one flip that's like been on the market for too long now. I'm like, man, I'm cutting this price deeper and deeper, just trying to unload this thing now, and I'm feeling it. That's why I was asking specifically around the short terms. So, like long terms, I really don't think the whole lot's going to change. It's not like you can just leave, especially because our rental prices, 1,200, 1,400, 1,500 bucks a month minimum wage. Most places can afford that, so it's not like these people are going to be not able to pay rents. But I'm talking, what happened? Do you think there could be a recession in the future, and how are you, I guess, doing some risk management in the idea of, hey, these short-term rentals that I have, in Joshua Tree or Columbus sounds pretty safe to me, or Branson, Missouri. But those two, like the vacation rentals, how do you see those faring out in a recession? Or you go, I think it's not going to change. I don't know. Just want to know.
Yeah, I mean, very market specific. I think in an established vacation market, so Branson is as aged and as favored of a vacation market as the Smokies. And so it's been there forever. Just people are only now hearing about it because of bigger pockets or in the internet. Joshua Tree obviously is a very new vacation market. And for things like that, I do have a little bit more worry than I do for Branson just because it's not as established. So for me, to be honest, my immediate plan would be I am going to do that cost seg this year to go ahead and write it off against my W-2. And then from there, just see, okay, can we sell the Joshua Tree property and can we move it into some baller short-term rental in Branson and really have an impact with the profit that we have inside there. So I think it really depends on the market.
What are you trying to sell your Joshua Tree property for? I might know a guy that wants to. I know two guys that are trying to buy in Joshua Tree actually, and then permits were too long to build. Come on, dude, live offer.
Yeah, it's a four-bedroom, two bath, 2,000 square foot. So fully furnished. It also depends. Do they want to buy the furniture or not? I'd say it's pretty good.
I would assume you want to sell the furniture, and you probably don't want to just try to skip it all and lug it. So I'm sure you're trying to attach it with it.
Yes, yeah, yeah. So it's a permitted operating short-term rental. Obviously, the transfer is to be determined by the city, so I can't ever guarantee that. Yes, I would like to sell it furnished, and so yeah, if your buddies are willing to hang out basically for the end of the year so I can do my cost seg, that is a definite option for us.
Yeah, yeah. No. There was another one that was asking 450 for a 600 square foot studio. It was very cutesy and it had like a ton of land with it. It was like almost 3 acres. So that was on the table, and we're like, I don't know about this. Like, whether or not it does well, what do we see in the future? But having more square footage, I think, is always just better, more safe.
Yeah, I mean, and totally, especially in Joshua Tree, everyone that I know that is under, if you're not either the Four Seasons where you had this super unique, like you dumped in $500,000 to build out a studio, basically, kind of rehab budgets. Unfortunately, lately you've seen a huge, huge dip in your bookings. But if you're in the four bedrooms and up still, it's still a very unique play because most, like 80% of them are under four bedrooms, which means we're really catering to two or three couples or families that come in there. And like that's been our saving grace in terms of the adjustment is a lot of people that I know, it's been hard under four bedrooms. So
Or just 8 kids that are ready to party.
it's true. It's true. I mean, we had God, our rental. I mean, our permit only has a guest for 10 head counts, and all of a sudden, this weekend actually, I just kept singing my phone. The ring notification was like ding, 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 ding. I was like, this is way more. And so then I opened up the camera and I was like counting, and I asked my wife too. I was like, wait, hold on, count. How many people do you see here? And she was like, there's like 16 people. And I was like, what? I mean, it wasn't some college kids partying. Luckily, I mean, there was a couple grandparents, but there was just like there were 16 people. It was, yes, a very big family in there with a couple of kids and things like that. But it's just unfortunate part of hosting that makes it difficult sometimes.
So what's your number? What's the number? We circled around the question again. What's the number you say right now? Someone gives me this much money, or sorry, at the end of the year after you do your full cost segregation, someone January 1st comes up to you with a check. What's the lowest number they need to write down? Oh, you're looking up numbers. I can see this.
I am looking at numbers now. I can't. I I would love to tell you that I have a number off the top of my head, but because there's so many, we're a few months out. I haven't even looked at comps yet. All I'm trying to figure out is like how much can we get back for this cost seg.
Oh yeah.
That is something that I just talked to Ash about earlier this week. Is um, we like Branson, Joshua Tree definitely has. It's a new established market, especially for those in SoCal. We get a few Bay Area people too, and so yeah, I mean, I'm happy to connect with your friends if they're looking. If they want to wait it out for a little bit, they can buy it fully furnished with an operational cowboy tub too.
An operational what? Cowboys what?
You haven't seen our listing, right?
No, no, no. What should I look up? I have my Air DNA up right now. What's gonna be the title of it?
I mean, I can share the screen. For those who I guess are watching this online, I guess you have to click the link down below to visit my Instagram profile to figure out where my listing is.
Is it north or south? There's actually not too many comments.
It's on the southern side of Joshua Tree. It's in Yucca Valley. And here I can share screen with you. Let's see here. Menu, listings, share screen. And do you have short-term rentals, Key?
Yeah, I tried it out off of a Burr actually. So I did I put 50K to purchase, 50K to reno, and it got refied at 170, but I Airbnb'd it out and it does like 2 to 3K a month. And I was like, this was easy. I did it another time and I was like, again, 3K a month, and I bought it for a 180K. And then I said, let me go all in. So I did bought one for 1.475 mil. It's a huge place in Naples, Florida. And then what is it? It brings in on the high months it's like 30K, and then on the lower months like 12. But I think it averages total of 24K. I have seen this actual listing. Hold on. I know.
You have?
Yeah, I've been looking into the Joshua Tree game for a little bit, just especially when we were like looking to buy something.
Well, there you go. This is our house.
Oh, and a pool table? You didn't even talk about that.
Pool table with the mural. Like, and see, the mural is the best part. I've been waiting to add a little neon sign here with our listing name, because that would make it really fun.
Oh, that's cool. Yeah. See if people can post it.
But it's a big 10-seater dining table. We got two of the Home Depot picnic tables, an extra little lounging area, little bar stool. Um, kitchen is it's a big open kitchen, which is nice. Way too many cabinets for what you need for an Airbnb. And you actually have to do the real Chemex. Everyone else is doing the Target Chemex. Come on, I'm just kidding. And then we have the 4 bedrooms. So,
I'm trying to pull it up as quick.
what do you think of the listing?
I think it's solid. I would guess you didn't take these photos. Or no, you do camera work. So some of these photos are probably yours, but I'm guessing you hired a professional because some of these look, I don't know, just a little too timed.
So I took this one, and then the rest of them we did hire somebody else. But I would say just from my day job,
Okay.
I am a professional photographer for my day job, but I don't call myself a real estate photographer. So I know how to do the bracketed exposures and all of that. But the person that I hired did a better job than me, and so I used all of her photos, except for she didn't capture this wall like I wanted her to capture, so that's why I still snuck in mine.
Gotcha. So what would you say your full day job is? Do you still work for a company? You're self-employed?
Yep, so I'm a marketing manager for JLR Vineyards and Wines, so I'm the national print and digital ad buyer for them. Um, and so that's that. And then the agency side is I'm helping individual independent businesses and as well as of a couple bigger businesses that are under contract now to help develop TikToks and Instagram Reels and YouTube Shorts for. So all the vertical video stuff. That's what I'm helping with them with. And, you know, hopefully if my day job finds this podcast, then they'll know that that's probably the end goal.
Yeah, no more day job is the end goal for everyone.
It's also scalable.
Yeah, you can kind of free up more time to add more, is what I find. You said, is Think Media the company you do? Or what's your cut up company? The one that makes the TikToks and helps influencers?
Yeah. I'm naming it JB Media, super, creative, but that's me. And if anyone that's listening needs help making TikToks or Instagram Reels, I can do the one-on-one coaching if you just want a coaching session, and after that you want to go off and do your own thing, like more power to you. But also if someone just wants to jump on a video call and run through 20 questions, and then I cut it all up and you have 20 TikToks, that's the ultimate goal, because everyone's talking they need to post more Reels, but
Never do. Yeah, I just can't sit. Once I did the math on it, I was like, it takes me about 30 minutes in order to like post one TikTok of editing. Not the filming process, the editing process. I was like, I need this done for me, and that's when I hired someone just full time to just edit. I used the editing agency for a while, and then I canceled them because I was like, I still have to download them and post them. I'm like, I don't have that headspace. I need someone to download, caption, post, do it all. All I do is talk with people and send off the raw footage now, which is the goal.
Yeah, yeah. I mean, and that's obviously the gold standard too for the package, and that's my most premium package. Is now it's your entire social media manager, but you don't have to pay someone 60, 80, $100,000 a year. We're a lot more affordable. Wink.
Like, so what is the affordability on it? If you want me to stop.
The packages usually start about $2,000 a month, and that's just for me to either if you want to I can either help draft 20 prompts for you or jump on a Zoom call and then from there I'll interview you, much like kind of like podcast style, but I'll also coach the responses throughout the way or have you rephrase things so that way it works better on the edit. And then from there you take that entire call, drop it into kind of our editing workflow, and then the team that I have, which full disclosure is VAs that I've trained, then just cut down all the clips, and we bring it back into a reviewing side. They can either review and or take it from there, or ultimately we just caption and post for them. So that way you have a social media manager without the salary overhead.
Yeah, that makes sense. JB Media.
And it's infinitely scalable. And so it is quickly, very quickly. This is an idea that was basically, it's been 2 months in exception, but since then if I can close one more client, it's basically already it's more than my day job. So
So, if you don't mind me asking, how many clients have you gotten so far? Because I've seen a lot of things, but it sounds like yours is a little bit more tailored because you help people actually do the filming, and a lot of people just ask for the editing. But how many clients do you have so far? What's your end goal or target goal for now?
I have 3 clients. If I can get, and that's in the last 3 months, and that's already at the surface level that they're at, has been very close to getting me to over 6 figures a year. The end goal, I told my wife this, and I said, well, if we can get 20K a month in billables by Christmas, there might be some changes, just for me. Then
We might change the lifestyle.
yeah, well, I not even change that, but just like, do I need the day job anymore? Because I'm not making 20K a month at my day job. And the opportunity cost now for me just getting more clients versus keeping the day job, 20K a month is, especially if it's been reoccurring for 3 months, kind of has a proof of concept there. So I'm leaving this next 3 months as a runway to say, can I pick up more clients? And can I also niche myself so much in the real estate space to where a lot of people, they'll hire editors and VAs, but they also now have to go back and check because they're making content about what are the nuances of an FHA loan. And an editor that you outsource somewhere else is not going to be able to translate that for you. And so all these different nuances, if I can talk to loan officers, talk to investors, and being able to say, hey, you get the first line of defense here so you can truly free up your time, and then I'm going to look through it. It is someone else is doing it. Now I'm just looking at 30 TikToks. And then from there, they get something that actually works for them. And it's just generating either more leads for the business and or building their investor list.
Do you see yourself, because let's say you scale up quickly, right? You get, I think 10, according to my math, 10 clients is 20K a month. Um, you, 5 more people try to sign up. I doubt it's easy to say no to money. So at what point are you spending, would you say, too much time on this? And you're going to go, okay, I need to hire someone that's doing this job and hire yourself out of your own role of like doing that coaching, doing that, let me film with you, let me give you the TikTok ideas.
So if I already brought on one of my best friends who's a video editor, he's already kind of come on board as a project manager with the hopes that he could take on the first batch of clients. So I'm already training him through the process and we're developing the systems together so that I'm just the final check. And from there, he gets plugged in and then handles X amount of clients. And as we figure out what that load is for ideal client service is going to be the next set of conversations. And then from there, it'll eventually be just bringing on more account managers and more editors that can both manage the workflow. And then is there anyone else in the real estate space that just wants to interview other investors and or professionals. I think the beauty of the model is that a lot of people will say, well, Josh, you're not going to do all the interviews all the time. You probably don't want me to do all the interviews all the time because I will only ask the same questions. But if I get another investor who is also has a similar skill set as myself, but now they're asking way different conversations, way different questions, it just brings it into a different dynamic that helps give variety to the conversation and to your social media than just me.
Makes sense.
So my sales pitches, but
No, I mean, hey, you don't got to pitch me on the idea because ever since I fired the agency and I got my own person, just my own VA, right? I was like, I bet you this is exactly what they were doing. The issue with the agency is there's just always typos. I don't think anyone did any sort of final review. But I was like, this is exactly what they're doing, and they're charging a pretty high premium for it. But I'm like, it's definitely worth my time to pay for a service like that just to have them churn and burn through it. Um, so it seemed pretty, like you said, scalable. It's like I was like, maybe I think I was maybe 2 months away from opening an LLC very similar and trying to stack it up like that. But I wanted a little bit more experience on my end doing the content creation before I did anything like that.
no, totally. I mean, I think there's so much room in the space. Like, as I'm just thinking about it, whether it be the real estate side, and another big target client is, whenever I do leave my day job on the winery side, God, like just on the winery side alone, I can get so many different clients because all the wineries, and especially now that I know the back end and the nuances of wine, geez, like there is so much room in this space. It is like it was just like when short term rentals just came up on everyone's radar. Like this is still in the beginning era of like this is the first inning of vertical videos.
Yeah, everyone's trying to be a content creator. It's the gold rush, and you're out here selling shovels.
Yeah. And the best part is that as long as you make sure that the expectations set, a lot of people falsely set expectations, so they don't set them at all. And so every time I onboard the client, I just say, okay, what is the measurement of success? Like, I just want a couple more leads. Dude, I can get you a couple more leads, easy. But if they're saying, I want 100,000 in TikTok, well, I don't have that, so I'm not going to promise you that.
Yeah, yeah, that makes sense.
I know. For me, if you're thinking about like what's the real macro picture for my goals, is can I scale this next year to 50 clients? And at that point, that's $100,000 a month. That's definitely Lambo money. Would I buy a Lambo at that point? Probably not. But I do want to then dump all that money, and I'd like to run my own deals as a GP, like big deals. But I'd also would definitely start funneling into LPs to people, to my friends that are running as GPs, just because everyone's dream is to eventually just be LPs, right? I mean,
Yeah, not my problem. Don't have to do any of the work. I just give people money, and they give me more money.
yep, yep. So,
Yeah. Have you ever had a? Did you ever do a raise? This will be the last one because I know we're pretty much over time at this point. Have you done a raise on TikTok or Instagram before? How'd that go?
I have never raised money on TikTok or social media in general. But it's not to say that I haven't ever done that. If you'd ever want to do a deal together, check yes or no on this Instagram story poll or shoot me a DM. Because technically, you can't really raise if you're not the 506C, right? So I know it's a super gray area, and I wasn't syndicating a deal. But the last time I raised was for a flip. And so, as someone DMs me, and now that I've now posted a lot more, people actually message me all the time, random people that I don't even know. And this is not to brag, but this is just the power of social. I'm sure you get the same thing is, hey man, if you ever get another deal, like let me know. Like, oh, John Smith, nice to meet you. Sure, right?
Hi. Um, you want to just send me money? Is that what you're saying?
It's the randomest, and like I've had, and then at one point I had like a random book a Zoom call with me if you ever wanted to invest with me, and then I would get people that would just jump on a call and say, "Hey, I have $100,000 for you." Like I'm not ready to take your money yet. Like can we at least get to know each other first? And that was just my own insecurities, and also kind of the reason why I'm thinking, can I get 100 doors next year? Can I just do that deal instead? Um, but that's how I did it, and that's how I felt It's still a gray area, and this is not financial or legal advice, but
Never financial or legal advice.
but from there, I took their numbers and I took their information and just said, hey, if I do have something, like I'll reach out. And so when I did have something, I reached out to people that I knew first, and I said, here's a deal that I'm working on. Like, what do you think? Do you know anyone that would be interested in partnering on something like this? And it wasn't a ask for money. It was the I just want your feedback kind of thing, the kind of pitch. And yeah, we funded the flip in 24 hours. So